I would love to hear your 3 cautions or your 3 tips for somebody who's interested in investing in real estate. I would love to hear your perspective.
Gosh, the cautions, I don't know where we draw the line between a cautionary note and a tip, but the cautionary note is don't wait until you know everything you need to know to do real estate before you get in. The best time to buy is now, not tomorrow, not the day after. And the second thing I'd say is when you do buy, try not to sell. And there are extraordinary circumstances under which it might make sense to sell, but in general, people who sell a property tend to live to regret it. And they say, yes, I bought it for $64,000 or whatever in the year dot, and I sold it when it was worth $250,000. I almost quadrupled my money. I made so much money. And then they look at what it's worth today, and it's 1.3 million or 2.8 million. And say, oh my gosh, for no extra effort. And I speak from personal experience. My parents bought a home in New Zealand. It was back when we had pounds, shillings, and pence there. It was £2,500 worth, $5,000. And 10 years later, they sold it for $32,000. And they made so much money in their mind. That was more money than my dad had earned by being an accountant for those 10 years. And we just looked it up online, and it's today worth $875,000. And even they were saying that. And we could have rented it out for all that time and collected rental income and had tax breaks and still owned it. And when the neighbor's house went on the market for a similarly ridiculously cheap price with the benefit of hindsight, it too would have been worth nearly $1 million. And we might think today, Bekkah, that houses are expensive. You deal in houses that are in the millions, and they are expensive. It's a lot of money, but guaranteed in 20 and 30 years' time, people are going to look back and say, oh my gosh, they thought those were expensive. They're now selling for 15 or 20 million, whatever. And it's not because the houses are worth more necessarily. It's that we've got deflation of currency, so we need more units of currency to describe what a bottle of milk is worth and a haircut is worth and all that sort of thing. And we have the fact that we've got inflation. And inflation hurts everyone. If you've got $1 million in the bank and inflation's running at a high 10%, but we've had that in the past, then your $1 million in a year it won't buy what you could buy today with it. It will only buy $900,000 worth. So you've got deflation of currency, inflation of prices. The only hedge against it, it's not stocks or bonds, it's real estate. Because the value of the real estate goes up, but the value of the mortgage, the number of dollars delineated by the mortgage, stays the same, or it goes down if you're paying it off. And that wedge between the increasing value and the decreasing mortgage is to your benefit.
Absolutely.
I love it.